Good morning, everybody. It's Christopher from Serene Education with your four majors and update for the 27th of January 2014. Okay, start a new week. Going to be looking at the weekly charts for the four majors. It's important that we look at the long-term sentiment or trend or analysis to give us an idea of what's likely to occur for the following week's trading. So, euro against US dollar on the weekly. Quite clearly saw midweek table. We saw some bullishness for the euro against US dollar, and that set the tone for the outcome of last week. And what we have now, as I mentioned, we had a pullback from those highs as the temp highs of the monthly fib level at 61.8 through October of last year and then through December. And what we've seen is a fall after a bearish engulfing candle, after a shooting star, a piercing pattern, and subsequently we saw a rally to the downside. However, the near-term target was going to be the 50% monthly fib retracement level here, just short of 1344, which it clearly did. And subsequently, what happened was we saw a bit of some contraction here, or some pullbacks, as people took a bit of profit off the table, and subsequently leading to this tweezer bottom. Now, tweezer bottom, sharp move lower and the sharp move or correction in the opposite direction, which forms a tweezer bottom. Here's another one over here where we saw a lot of selling, and then we saw a tweezer bottom at a price support and resistance level, which in this case was a 23.6 fib level, and we saw price shooting aggressively in the opposite direction. Here potentially a tweezer top, well, more of a bearish engulfing in that case. Tweezer top. There's quite a few of them here on the euro against US dollar. Tweezer, tops and bottoms, and you can see the overall sentiment over here is still one of positiveness. Swing high, swing high, swing high here through the 23.6 most of November, December, January of last year. In fact, finding a lot of support through here, even though we had a lot of pullbacks. And subsequently, because it failed to break below this level, we saw a lot of positive sentiment coming through, and sure enough, what it led to was swing highs, therefore dictating upside trend, and that's exactly what we're seeing now. We do have a pullback on the euro against US dollar. However, you'll notice the candles on the weekly have still not gone red. We do have a red arrow though, however, and that's one of the four requirements on the template. We want to see an arrow, followed by a candle, followed by RMO, followed by the OSMO. Those are the first four primary requirements of the template. Then we look at the actual sentiment behind that. The buy and sell arrows is part of the actual the overall movements, and it is the actual product of the FX8 Ultimate template, and we're just using this to confirm that. So here we have a sell arrow, but we don't have a genuine sell. Ideally, if we saw price trading below the 50% retracement level, then likelihood is we could see potential change in market sentiment. But however, the overall sentiment still wants to favor highs, so therefore, even though we're looking for selling, if you want to trade that selling, we would trade it aggressively into the price support and resistance levels. So last week in particular, you might be able to take a quick negative trade against your overall sentiment, but you'll be doing it with a lot of risk attached to that, because you're trading against market sentiment long term. And subsequently, what happened was last week, in fact, we saw a buy or a lot of positive sentiment coming into the market from Wednesday onwards, and which has led us to this tweezer bottom formation now. So overall sentiment still favors the highs. So if you drop down to our daily now, what you're looking for is price to now give us a confirmation of that. You can see that bullish last week, however, not really moving any higher going into Friday, in fact, which led to a consolidator. But what it's done is it's seen price trading above a price support and resistance level, or in this case a swing low. Intermediate swing lows were formed over the past couple of weeks, through January in fact, swing low, and then we had the bullish breaker higher, but not getting above the prior high. So now what we do is we do see the candle still being positive. We do have a blue arrow, however that blue arrow is has formed on a very, very indecisive candle, very small range. What we want to see now is a nice daily break higher, and if we can just see that, then we could potentially trade back up towards our current highs or resistance level highs that we saw recently through October and December, which is a healthy 126 pips away. But by the time we get a daily close higher, that might eat into a fair amount of that potential profit, but it still allows us to capitalize on that positive sentiment move, drive higher. So what we want to see is price closing higher. do have anything today over the next couple of days that might help euro move higher. We have Eurogroup meetings this morning. However, at 9 o'clock a.m. GMT this morning, we have the German Info Business Climate details coming through. They're expecting a slight expansion on that figure from 109.5 to 110.2. Other than that, we have German Baba monthly report. However, I think the big one this week that's going to move the market as such is the FOMC statement, followed by the federal fund rate. And that's going to be the catalyst. If we're going to point to anything this week that might potentially see price continuing in either direction, is Wednesday's data. So the 29th of January, expect to see some movement after the US data comes out. On that day, we have also the Bank of England, Governor Carney speaking as well on that day. So expect movement on that day. You can see here on the indicator box, there's a lot of negativity on the R squared. So even though we are seeing a lot of genuine sentiment, it's not really been backed up by the R squared, which is what we'd like to see. So here, if anything, we want to see a nice bullish engulfing day today to see any further positive opportunities to the upside for euro against US dollar. Moving on to sterling on the weekly. Here we've seen 1, 2, 3, 4, 5 consecutive weeks now, a full month and a bit of consolidation now at the monthly fib level, which is the 38.2. But I want to draw your attention to the monthly fib level, monthly chart for this particular one, but you can quite clearly see straight away what's the first thing you notice over here is a lot of resistance levels along this current level. You can see this goes back to 2009. We had a major resistance level after the correction, after the massive sell-off that we saw. However, not really breaking above that institution moving average and consolidating, and then the outcome was negative. And each time we've actually tried to move back or to try and reattempt the current high that we saw, we've seen price failing at this exact level. Noticeably, just recently over the past couple of years, especially 2012, we saw a number of attempts of the monthly fib level here at the 38.2. However, price failed to get above that level and reattempted the monthly fib level low. On every single occasion she's fallen. So here, important is that we're getting a lot of growth for sterling, which is great. The indicator box over here primarily tells us you should be looking for longs. However, psychologically, we should be well aware that each attempt or major attempt of this high, you can see here back in 2011, in fact, we had a very bull month going into that major resistance level here, and then we had a major pullback. Same thing before, we had a lot of positiveness going into the same level, but price actually failed. Here again, we're seeing a lot of true sentiment moving sterling higher, which is what we like to see. However, we've got to be well aware that in the past we had the same start to that sentiment and it came out looking bearish. So here, if anything, January needs to close higher than the current institution moving average, the current major support and resistance level highs. Got to see that. We've got to see prices being happy above the current major long-term support and resistance level, because if we do see sterling rallying above that level and finding support, then that really opens up a potential for higher highs with less price consolidation or sentiment getting in the way. So we have a lot more true sentiment drives higher, and to start with, there's at least 600 odd pips to the next level here. And each one of these would probably give you in around, well, the next level is a good just short of 900 pips. So there's a lot of potential profit to the upside if and when we can get above this major long-term support and resistance level, psychological resistance level that's been in place since 2009, guys. It's imperative that we get above here, and it really moves higher, because what we've seen in the past is a failure to do so, and which has led to very, very strong pullbacks on the market, which has led to potential trades in the opposite direction. So sterling looking good with unemployment figures, employment figures, production figures, GDP figures, all looking fantastic, but that will come to nothing if the overall sentiment out there still does not favor higher highs. That sentiment's going to drive through. At the moment now, we are seeing a real stall on the markets. We are, especially on the emerging markets, unfortunately, we're seeing a lot of negativity. A lot of uncertainty there is still out there, and that will drive or drag prices lower regardless of if we are seeing sentiment close to home. So be very, very vigilant taking any trades on the shorter term time frame. So back to the weekly. Straight away we get a buying opportunity, and you can see in the weekly very strong, but we've got to be well aware that we're seeing a lot of indecision creeping into the market. In fact, a full month now of indecision, because the long-term sentiment or is well aware that we're trading at major support and resistance level highs, not only in the monthly fib level but also on the 2009 level, major resistance level, and you've got to be well aware of that, because you don't want to be trading, even though it's positive upside movement, you don't want to be trading consolidation upside, because you could be holding something for a long period of time and not getting any genuine bang for buck. We want to be in the market, of course, but we want to be in strong movements, not consolidation, not stagnant. And that's exactly what we're seeing at the moment now, is consolidation, because the overall sentiment still wants to drive higher, but they know they are trading at a major psychological resistance level. We've got to break that in order to see any further movement higher. US dollar Swiss franc on the weekly, like its European counterpart, if euro is moving higher, then the overall sentiment for the US dollar against the Swiss franc should be doing the total opposite. And we're seeing that. The indicator box is telling us we'll still be looking for negativity. We have had a longer consolidation pause here as prices failed to get below the monthly fib level here at the 38.2 level. And subsequently what's happened is we've seen a bounce for the US dollar. However, that's been taken away if you look at the last week with the trading. And subsequently, because the candlesticks were still negative, we should still be looking for negativity overall. Long-term sentiment should be down. Now, apologies for the phone call. Yes, so what we're looking for the US dollar Swiss franc here is still negativity in play. You can see last week's candle, bearish engulfing now, forming a new swing low, and ultimately still falling. The institution moving average still way above price. We are going to return and reattempt the 38.2. That would ideally be the scenario. However, you can see that the R squared now, which is one of the reasons why we have it here on the indicator box, is telling us the drive, the sentiment drive behind the movement. So we have a lot of negativity on here, but the R squared is not complementing that true drive that the negativity we're seeing over here. And as long as price still maintains above the 38.2, then the overall sentiment would likely favor the US dollar to make new highs against the Swiss franc. However, that has been taken away, as we've clearly seen a drop against the US dollar against most of its crosses in the past week. And subsequently what it's done now is it's painted on a nice bearish engulfing candle. So on the daily, you can quite clearly see we had a bit of positiveness creeping into the market, well, onto this particular pair. However, not breaking prior highs. Ideally, what we want to see is break up a prior high. But what it needed to do was also get above the institution moving average. Here, clearly, you can see we actually had price making higher highs, but still trading below the institution moving average. So subsequently, price still overall still want to be negative. And subsequently, what we did was we saw price reverting to the downside. And same here, bearish engulfing through most of Thursday and Friday, and taking us below a prior low now, which is a swing low, which is the intermediate swing high that we saw on the correction. So now we almost have this breakout wedge formation now, bearish engulfing. Likely see a pullback if you want to see a pullback in the market. If the pullback does pull back, if we do see price pulling back, then we should be looking for price to potentially pull back to the underside of the price support level that we saw over the past week or so, and then the continuation back down to the bottom. RMO, OSMO, all but looking good on the daily. It's just that we don't have the R squared favoring that negativity at the moment now, and hence the reason why we've been consolidated. The start of today, very indecisive, but the market's still got to open. I mean, it's 22:09 now GMT in the morning, and we've got to see that sentiment driving lower to see any further lows for the week. However, saying that, we do have a lot of news out on Wednesday, as I mentioned, for the US market in terms of the FOMC statement, as well as the interest rates, the Fed rate. So that could be a catalyst for things to come. So we've got to be well aware of that. Are we going to see consolidation up until that point? Who knows? But that's ideally likely to give us a directional call going forward. Weekly, on the US dollar Japanese yen, still a fair amount of resistance at the 61.8 after the breakout of that wedge formation. You can see a clear wedge formed over a significant period of time. We had a breakout above the 50% monthly fib level, the pullback, and then what we subsequently saw going into the latter part of December was a continuation and that continuation was a very strong drive up to the 61.8 at 105.54. Getting there, we saw a lot of indecision creeping in. We had a hangman here candle, and then we had the bearish engulfing candle to complement that selling, that negativity or that picture on the candlestick formation, and then we've seen price dropping low for the US dollar, and negativity last week driving it even lower, and you can see now that we have broken a prior tweezer bottom, a consolidation bottom. So what we've seen now on this particular pair is price failing to make swing highs, which is what we want to see on any upside movement, and in fact making swing lows, which has now driven the US dollar lower against the yen. And on the trading session last night, we saw a slight move higher, but this morning we have seen higher highs for the US dollar against the weak yen. A very mixed indicator box, as you can quickly see. The long-term sentiment still favoring highs, but we're seeing a lot of indecision on primarily our daily and 4 hours. We start seeing negativity really starting to bite, and a bit of positiveness intraday. But you can see that the R squared, whether it be selling or buying, is complementing it. So indecisive creeping in near term, and just quite clearly you can see a lot of negativity at the close of last week. However, near term knee-jerk reaction. So if we are to see this to be a genuine sell opportunity going forward, then what's likely to happen with the bearish breakout that we saw last week is we want to see that now being capped out by the price support and resistance level swing level here, and subsequently that will then look to drive prices low for the US dollar. As I mentioned, there's a lot of news out, especially on Wednesday for the US dollar, in terms of the FOMC statements, as well as the federal fund rate announcement. We have crude oil inventories, etc., a lot of other things for the US dollar, but I think the most important part would be the FOMC statement, as well as that federal fund rate announcement. Okay, so very, very important news announcement to look for the coming week, especially Wednesday. Interest rates 0.25. Are we going to see a change? What are we going to see from the FOMCs? I mean, they've already started to taper on their purchasing plan. They cut their purchasing plan by 10 billion. So they were at 85 billion. Now they've dropped it to 75 billion. Sorry, from 85 billion to 75 billion. There was a 10 billion pound taper on that. And the markets are running scared at the moment. So a lot of this free money, printed money, flowing around quite freely over the past couple of years is now starting to be taken away. And the Fed's policy will probably potentially to take a lot more as 2014 rolls on, but that means that a lot of these, especially the futures market, the equities market, has been really rallying. Because of this, you start taking it away. The long term is going to be consolidation, and now everybody's probably wondering, well, where do we invest now if we're not seeing any true momentum from the market on the equity side, where they're going to be starting looking to put their money. And that's exactly what the long-term traders are trying to do now. They're trying to go, great, oh, where do I go to now? And we're seeing a lot of indecision in the market, especially the emerging markets, which is not great, because they are the ones that are really moving the market overall, and we're seeing a lot of hesitation on that. So clearly the US dollar, Japanese yen failing and pulling back. The overall sentiment, I mean, you'll notice the candlesticks are still very much up, still blue, they're not red. We have had a red arrow, and as long as those candlesticks are still blue, then it's telling us we should be looking for further buying opportunities. But the longer, as I mentioned, the longer we start seeing more swing lows, then there's ultimately likely to be that sentiment will then kick in, and the bias will then return to negativity. You can see the OSMO indicator here quite clearly negative overall, as we've been in this consolidation pattern, really negative. The RMO is starting to catch up now. RMO very trend-like. It's starting to head towards that zero level, but you can see a lot of negativity on the OSMO indicator just recently, as we saw major sell-off. So here, pullbacks, but be aware that if we don't see price moving above the price swing low breach, then there's more likely to be a pullback and then a continuation in the direction of the breakout. So keep that in mind. Obviously, back it up all this analysis with strong money management rules, very important, and you're likely to make less mistakes. You've got to treat this template very mechanical in its approach. It was built to be very mechanical in its approach, taking that psychological, emotional trade and away from the trading. That's where you make most of your mistakes, when you start bringing emotion into your trading. and you need something that's very mechanical in its approach. Hence the reason why a lot of people trade black box systems and stuff like that, because they're not taking into consideration any emotional side. So yeah, very, very mechanical in its approach, looking for the rules, strategy rules, requirements, arrow, candlestick, RMO, OSMO to start with, and then look at the overall indicator sentiment box at the bottom. That's ideally the overall requirements, and you take it from there with back up with some money management rules, and you're on for a winner. Okay, so keep that in mind. Otherwise, hope you have a fantastic trading day today, and a great trading week. Just be vigilant of those news announcements, especially Wednesday. In fact, it is a very important day for the market, as we all look to the FOMC. We always look to the Fed to see how things are going on that side. So be vigilant. Otherwise, have a fantastic trading day. I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.